In 2025, Iraq's economy has shown significant signs of stabilization, marked most.
The markets are soaring this quarter, demonstrating remarkable economic stability despite rising inflation concerns.
Welcome back to Iraqi Dinar Alert. Today, we're diving deep into two cornerstones of any healthy economy: inflation and economic stability. These aren't just buzzwords for economists. They directly impact your daily life, your savings, and the future of our nation. So, what's the real story behind them? Let's break it down. First, what exactly is inflation? Simply put, it's the rate at which prices for goods and services go up, which means your money buys a little less than it used to. A small amount of inflation is actually good. It encourages people to spend and invest, which keeps the economy moving. But when it spirals out of control, it can eat away at savings and cause major uncertainty. We measure this mainly with the Consumer Price Index, or CPI, which tracks the price of a typical basket of goods and services that families like yours buy. So, what causes inflation? There are two main culprits. First, there's demand pull inflation. This happens when everyone wants to buy more stuff than is available. Think of it like a hot new gadget selling out. Prices go up because demand is so high. This often happens when the economy is booming. The second type is cost push inflation. This is when it becomes more expensive for businesses to make things. If the price of oil, raw materials, or even wages goes up, companies often pass those extra costs on to you, the consumer, through higher prices. This brings us to economic stability. A stable economy is one with steady growth, low unemployment, and predictable, low inflation. It's the kind of environment where businesses feel confident to invest and hire, and people can plan for their future without worrying about sudden economic shocks. Instability, on the other hand, means recessions, job losses, and a lot of financial stress for everyone. Think of it like trying to build a house on shaky ground. It's risky and unlikely to succeed. So how do these two concepts connect? They're like two dancers in a delicate performance. A little bit of inflation can be a sign of a healthy, growing economy. It keeps money circulating and prevents the opposite problem: deflation, where falling prices can cause people to stop spending altogether, grinding the economy to a halt. However, too much inflation throws the dance off balance. It erodes the value of money, makes it impossible for businesses to plan, and creates widespread uncertainty. We've seen historical examples where hyperinflation completely destroyed economies and wiped out personal savings. So how do we keep this dance in balance? Governments and central banks have a few tools in their toolkit. The main one is monetary policy. By raising or lowering interest rates, a central bank can make it more or less expensive to borrow money. Higher rates can cool down an overheating economy and fight inflation, while lower rates can encourage spending and boost a sluggish one. Then, there's fiscal policy. That's the government's power to tax and spend. By adjusting spending and tax levels, the government can also influence demand in the economy. They also use supply-side measures, like investing in technology and infrastructure, to make it easier and cheaper to produce goods, which helps keep prices stable. In our modern world, this is more complex than ever. Global events, like a pandemic or a war, can disrupt supply chains and send prices soaring across the globe. We've all felt that recently. It's a constant challenge for leaders to navigate these international pressures while keeping their own economies on track. Ultimately, managing inflation isn't just about numbers on a chart. It's about people. It's about ensuring your hard-earned money holds its value. It's about creating an environment where families can thrive and businesses can grow. Achieving that perfect balance between healthy growth and stable prices is the key to long-term prosperity for everyone. Thanks for tuning in to Iraqi Dinar Alert. We hope this helps you understand the forces shaping our economy. Ever wondered why prices for everything seem to be on a roller coaster ride lately? It's not just you. The world of economics has gotten way more complicated, and understanding what's really going on with inflation and stability is key to navigating our financial futures. Let's break down the big picture. For decades, we had a pretty standard playbook for managing the economy. But today, that playbook is being rewritten in real time. We're dealing with a perfect storm of rapid technology, a deeply connected global market, climate change, and political tensions. These aren't just headlines. They're powerful forces shaking up our economic reality. Think back to the last few years. The pandemic hit, and suddenly, global supply chains snapped. Lockdowns and labor shortages meant goods couldn't get where they needed to go, and prices shot up. To keep economies afloat, governments pumped in massive amounts of money. This helped people, but it also supercharged demand, pushing prices even higher. Then, just as we thought we were catching our breath, geopolitical conflicts like the war in Ukraine sent energy and food prices soaring. These events showed us just how quickly our economic stability can be rocked by global shocks. But it's not just about supply chains and conflicts. The digital revolution is another huge piece of the puzzle. On one hand, things like AI and automation can make businesses more efficient, which helps keep prices down. On the other hand, we have new frontiers like cryptocurrencies. These digital assets operate outside the traditional banking system and can make it harder for central banks to manage the money supply. Plus, with global e-commerce, a trend that starts on one side of the world can instantly shift prices everywhere else. And we can't ignore the elephant in the room: climate change. Extreme weather events like floods, droughts, and hurricanes are becoming more common and more severe. When a drought wipes out a harvest, food prices spike. When a hurricane damages infrastructure, rebuilding costs go up. Governments are starting to invest in green energy and climate-resilient projects, which is great for the long term. But in the short term, this transition also has costs that can feed into inflation. So, what are policymakers doing about all this? They're getting creative. Central banks aren't just looking at local inflation anymore. They're monitoring global financial trends and using flexible interest rate strategies. Governments are using targeted support, like subsidies for energy or food, to help the most vulnerable people without overheating the entire economy. There's also a huge push to make our supply chains stronger by diversifying suppliers and bringing manufacturing closer to home. One of the most fascinating parts of this is managing our expectations. If we all believe prices are going to rise, we rush to buy things now, which, ironically, causes prices to rise. Central banks know this, so they use clear communication to guide our expectations and keep things stable. In our hyper-connected world, where information spreads in a second, managing this public perception is more critical than ever. No country is an island in today's economy. A decision made by the U.S. Federal Reserve can affect investments in Asia, and a drought in South America can raise your grocery bill in Europe. This is why international cooperation through organizations like the IMF and World Bank is so important. By working together, countries can cushion the blow of global shocks. Looking ahead, the challenge of balancing inflation and stability isn't going away. Technology, climate, and geopolitics will continue to be major players. For us as individuals, and for businesses, staying informed is our best defense. Understanding these forces helps us make smarter decisions, whether it's about diversifying our investments, managing debt, or planning for the future. The modern economy is a complex, interconnected web. By understanding its new rules, we can all become more resilient and secure in an uncertain world. In our last video, we broke down the basics. Now, let's get practical. How do we actually fight inflation and build a strong economy? It takes a mix of smart policies, innovation, and learning from the past. Let's look at some real-world examples. Remember the 1980s in the United States? Inflation was through the roof. The Federal Reserve made a tough call and raised interest rates sharply. It was painful at first, but it worked. Inflation came down from double digits, and the economy stabilized for the long haul. Now, contrast that with Japan. Since the 90s, they've fought the opposite problem: deflation, where prices fall and the economy stagnates. The Bank of Japan tried everything, even negative interest rates, just to get people spending and stimulate growth. And then there's Brazil, which faced hyperinflation in the late 80s and early 90s. Imagine your savings becoming worthless almost overnight. They had to completely reform their currency and impose strict financial discipline to get things under control. These stories show there's no single magic bullet. Every country needs a tailored strategy combining different policies to succeed. So what are the modern tools in the fight against inflation? Today, central banks are like data wizards. They use real-time analytics on everything from our shopping habits to global market trends to make faster, more precise decisions. Governments are also getting smarter. Instead of broad, economy-wide stimulus, they're using targeted subsidies. Think help with energy bills or food costs for those who need it most. This protects vulnerable people without overheating the entire economy. And what about those supply chain problems we've all experienced? The solution is diversification. By not relying on a single country for essential goods and investing in local production, nations can better withstand global shocks and keep prices stable. Plus, investing in a green economy, like renewable energy, isn't just good for the planet, it also helps stabilize energy costs in the long run. Technology is a huge player here. Automation and e-commerce can drive down costs and increase efficiency, which naturally helps control inflation. But it also creates new challenges. With prices online changing in an instant, and the rise of digital currencies, central banks have to constantly rethink their strategies. The key is to embrace new tech while managing the risks that come with it. But fighting inflation isn't just about quick fixes. Long-term stability requires a solid foundation. First, governments need to practice fiscal discipline. That means no excessive borrowing that could fuel inflation down the line. Second, we need to invest in people. Better education and job training create a skilled workforce that can adapt to change, boosting productivity and supporting stable growth. Third, economies shouldn't put all their eggs in one basket. Countries that rely on a single industry, like oil, are extremely vulnerable to price swings. Diversifying creates a much more resilient economy. Finally, in our connected world, international cooperation is essential. When major economies work together on policies and trade, it helps everyone manage shocks and maintain stability at home. So, what can you do as an individual or a business owner? You're not powerless. Investing wisely in assets like real estate or stocks can help protect your wealth. Simple budgeting and managing your expenses are also powerful tools to maintain your purchasing power. And, if possible, diversifying your income sources provides a great buffer against economic uncertainty. For businesses, smart inventory management and finding operational efficiencies can help absorb rising costs without passing them all on to customers. Looking ahead, the challenges are real. Geopolitical tensions, aging populations, and climate change will all impact our economic future. But there are also incredible opportunities. New technologies, like AI, will continue to reshape our world. The goal is to balance the benefits of these disruptions with strong social protections to ensure no one is left behind. To wrap it all up, managing inflation and ensuring economic stability is a team sport. It involves governments, central banks, businesses, and individuals all playing their part. By combining lessons from history with modern data-driven strategies and a forward-looking mindset, we can build a resilient global economy that is ready for whatever comes next. It's all about working together to navigate uncertainty, protect our wealth, and create sustainable growth for generations to come. Thanks for watching. If you found this helpful, be sure to like, subscribe, and hit that notification bell so you don't miss the next part of our series.